Well, g'day there, everybody. Thanks a lot for joining me in this weekend market overview. What I'll be doing over the next 5 to 10 minutes is just walking you through some of the advancements which have been happening with the appreciation of the US dollar and how that reflects and how that's really hurting the price of commodities priced in US dollars. Obviously, the US dollar itself has seen or has been on a parabolic rise since breaking out in early October above that 96.40 trigger. We have seen this move very quickly to the upside. We got a very brief pullback just shy of that longer term resistance area below 100 on the index itself. It held at the exponential moving averages, and really since or over the past 2 weeks it has been on an absolute tear higher. If I change to the weekly chart, you can see this for yourself. We have overcome resistance which has held since early 2015. You can see over here we've had maybe 2 if not 3 touches on this level, but definitively the week just been we have closed above it. What we expect to happen with the US dollar, given that it has advanced so far from really the breakout trigger, the breakout point, the pivot point down here at 96.40, are expecting this to slow down briefly. Now, we're not looking for a correction whatsoever, just to slow down, a nice short-term consolidation to help, or at least wait for those exponential moving averages to catch back up to the price of the US dollar, and then again for it to act as a trampoline and to help the further continuation or the appreciation of the US dollar in terms of, or against relatively, the basket of currencies which it trades against. What does this mean for commodities markets? What does this mean for gold and silver in particular? If I bring up the price of gold, or at least the chart of gold, the GLD ETF, you can see that as the US dollar has been soaring, the US dollar has, or pardon me, gold itself has been under quite some pressure. It has been being sold, and that is really just the trade-off again between the purchasing power of the US dollar and how these commodities are priced in that same currency. As you can see, the US dollar, or the gold, pardon me, has broken down below 124. That was early October as the US dollar started to get moving again above that breakout of 116. What happened? We moved into a short-term oversold area or reading on the stochastics, and we really broke down from again that structural support area. What we were waiting for again was that bounce, that retest of old support as new resistance, and then to wait for specific candlesticks to show up and look for an opportunity to re-short gold, or the GLD ETF. As you can see, we got that shooting star candlestick a number of weeks ago over here. We tried to continue above that pivot point, which was coming in around 125. What happened? We failed. We tried to get a little inside day Moabozu type candlestick, another doji candlestick, and then we started to see the reversal gap take place. This was the first warning signal just here. What happened again, moving back, or at least a couple of days beyond that particular reading, we got the gap up. What happened? It was sold, and that was really our engulfing candlestick pattern. That was, again, that textbook signal in terms of candlestick patterns aligned with chart patterns to let you know, as a technical trader, that the back test had been completed and that we were looking for a breakdown. Our entry was put around 119.68, and as of the week just passed, we got very close to our target down here on Monday and also on Thursday. We ended up closing at 115.10 on Friday. And what I'd encourage people to be doing right now is to bank that profit, put that money in your back pocket, and really exit out of those gold positions. The reason why is because we are at macro support, a very, very important area for the GLD ETF. As you can see in the months of February, in the months of March, in the months of April, also during the transition from May into June, we have established a very strong support area. This is coming in more or less where we closed at on Friday, or really just above it, more so around that 116 area. If I take the annotations off my screen also, the chart pattern itself isn't really looking all that promising for the price of gold moving forward. It really looks like, let me just get my drawing tool working. This looks like a left shoulder over here. It does look like a sort of prolonged topping type of pattern, some form of a potential head going on. And then what we are doing right now is potentially carving out that right shoulder neckline. So as you can see, we've got the seller from 124 down to 116. And say, for instance, if we do get the bounce in gold, and that sort of correlates at least with the short-term pullback, a constructive pullback in the price of the US dollar, well, then we would expect gold to rally. The problem is for gold is that we have got a very strong resistance area. If you pay attention to around this figure here, this horizontal line on my screen coming in around 122 all the way up to about 124, this is going to act as very strong resistance. So if I bring back on my annotations, you can see I already have these resistance areas drawn. In fact, I can bring them down just a little bit or even duplicate the line, but it's really coming in around this critical pivot point just here. So what we're looking at right now on gold is potentially a short-term bounce. That is most likely going to take us up into this red box. However, this red box is going to be another shorting opportunity. That is as long as the US dollar remains constructive, as long as the US dollar remains healthy, and as long as it continues to put in anyway higher highs and higher lows as well, which is the textbook definition of a bullish trend, which again is going to unfortunately place headwinds on the larger commodity complex or other commodities which are traded in the price of the US dollar as well. So think about that for gold. We are at a support level. It would be foolish right now to be shorting into this weakness for gold. You've more or less missed the move which has already happened, and you need to be paying attention for another opportunity to reposition that original trade or to add to the trade if in fact it has the legs to it to actually bounce up and provide you with that opportunity to reshort. The same with silver. Interestingly enough, silver and gold have both broken those, or at least silver, has broken that really aggressive intermediate trend line from the lows in 2016. You can see over here that on the weekly candlestick chart, we do have that outside day sort of engulfing Marubozu candlestick right here. We've definitively broken this trend line. You can see the volume is also starting to surge as well. That's really confirming the break of that trend line. And very similar to that of gold, we are putting in some form of a short-term topping pattern on silver. You can see these consecutive lower highs, and this is again is just unfortunately due part to the sort of intermarket relationship between this and of course the US dollar. So as we continue to put in lower highs in silver, just expect again this to continue to the downside. I've got a support level down here which I'm paying attention to just above 1480. I'm not sure if we'll get there on this particular swing. Silver is lagging gold somewhat, but really not by all that much, but it still has lower targets which I'm looking at. Just be open to the bounce, pay attention to the 50 exponential moving average, also pay attention to the back test of this intermediate trend line here, because all of these areas are going to act as resistance as long as the US dollar continues to remain above that 100 area on the index itself. So on that note, everybody, have a fantastic weekend. I'll be back with you during the week for some more interesting market analysis when of course the time is right. All the best, everyone. Goodbye.